What's up, chicks with dicks and dudes who enjoy being hit? Big news on Wall Street. IPOs are back. Yeah, it's like a pumpkin spice for finance bros. It comes around every fall. Everyone pretends to be excited, and by January, you regret buying in. This week, 6 companies went public in 5 days, each raising more than $100 million. That hasn't happened since 2021, back when Peloton was still a thing and Sam Bankman-Fried was just that vegan guy in cargo shorts. Wall Street raised $4.4 billion this week alone. They're calling it the busiest stretch in 4 years. And what's behind it exactly? Well, investors are just, quite frankly, bored. That's why Robinhood is secretly becoming FanDuel with stock options. Let's be honest here. They've been sitting on cash, waiting for the Fed to cut rates, waiting for AI to make their kids' college essays better, and waiting for anything that looks like a quote unquote next big thing. So now we've got a parade of companies ringing the NASDAQ bell like it's Mardi Gras. Klarna, Figure Technologies, BlackRock Coffee Bar. Yes, a coffee chain IPO. I mean, Starbucks walked so these guys could stumble onto the trading floor with free samples and oat milk lattes that cost $18. And of course, the Winklevoss twins. Yes, the Gemini crypto bros. They're back, not in a Facebook lawsuit this time, but with a $425 million IPO. Their stock's already up 18% somewhere. Mark Zuckerberg is laughing in binary. Now let's go ahead and break it down. Klarna, the buy now, pay later company that's fisting credit card companies in the sphincter, raised $1.37 billion. Their stock immediately dropped 3%. Buy now, regret later. Seems like the business raised $787 million. Their founder, Mike Cagney, is now a billionaire. He says he'll use the capital like a weapon. Are you fucking John Wick, bro? Shut up. Great, because if there's one thing Wall Street needs more of, it's weapons, right? And then we have Gemini, the windowless think tank, or the Winklevoss twins raised $425 million. Finally, proof that if you lose Facebook and you lose the lottery on Facebook, well, just wait 15 years and invent a crypto lottery, and you'll pretty much be good to go at that point. So that's what happened with them. Now, BlackRock Coffee Bar, they raised $294 million because what America really needs is more places to buy $7 lattes served by a 19-year-old with an eyebrow piercing. And then Legence, a building efficiency company, raised $728 million because nothing says sexy IPO like HVAC upgrades and plumbing tools. Yeah, only plumbers. Collectively, these IPOs are up. Some stocks surged as much as 45% on day one, which just proves investors don't need fundamentals. They just need vibes, bro. I mean, these are the same people that bought tickets to Fire Festival. So are we shocked, really? Now, Bank of America says IPO in issuance has exploded post Labor Day. That's finance speak for everyone's tan, broke, and desperate. Road shows are packed, bankers are busy, and CNBC producers are drooling like it's 2021 again. But here's the thing. Underneath the champagne, the job market looks like crap. The BLS just revised job growth down by 911,000. August added only 22,000 jobs. Unemployment ticked up, yet Wall Street's acting like a college kid who just found their parents' credit card. Goldman Sachs CEO David Solomon even admitted risk appetite is definitely at the exuberant end. Translation, we're partying like it's 1999, but the Y2K bug is economic fundamentals. And Citigroup CFO chimed in, we're looking at slowing growth in 2026. In other words, enjoy your IPO sugar rush. Reality is slowly coming in the mail. So what do we do with this exactly? Let's wrap this up like a condom so you can all play safe. For investors, IPOs are like Tinder dates. Some look hot on day one. Most ghost you by week 3. Klarna is already down 3%. If you don't understand the business, please don't buy the business. For workers, don't confuse Wall Street's euphoria with your paycheck. IPOs are booming, but pay raises next year are projected at 3.4%. Insurance premiums are up 70% in 5 years. Translation here, bankers pop Dom Perignon, and you're going to pop ibuprofen to get that headache. For policymakers, be careful. IPOs thrive when markets believe the Fed will cut rates. But if they're cutting because the economy's weak, that's a champagne toast at a funeral, though. And closer. IPOs are fun to watch here. They're buzzy, flashy, and everyone wants in, kind of like the hot girl at a sorority. But remember, this is Wall Street. The last time they got this excited about quote unquote innovation, we got WeWork, SPACs, and Elizabeth Holmes and a turtleneck. So cheer for the comeback. Sure, pop champagne, mortgage platform over oat milk cold brew. Maybe it's time to log off Robinhood. Anyways, I'm Max Pitts. Make sure you like, subscribe, comment, share, turn that bell notification on so you never miss a Trades and Gains update. And I will see you sexy little felines in the next one.